So let's get into a ride the wave situation where you need to make at least 10 pips. Okay. So let's do that. And I will probably, I'm just going to trade light. And so right here could be one, could be one as you're looking at the 5-minute chart. And so just don't know. All right. I'm going to zoom out so I can see. However, I don't ever get in. I don't ever get in when it's going. I just wait for a little bit of a pullback here. And just get in, right? All right. So ride the wave for at least 10 pips. So the rules to riding the wave are this, just to kind of reset. The rules are this. One, you have 0 take profits. 2, you never get in. You don't chase the market. So we're not chasing the market. And when you do get in, your exit point is when the next, when you see a reversal confirmation. So what a reversal confirmation looks like is if this bar closes higher than the previous bar, that tells you that you need to get out, right? Yeah. Also, if you think it's like, honestly, riding the wave would have happened once it crossed over here, but it tricked you because it bounced up right here. And if you were in, you probably should have got out, you know, or if you held on to it and dropped back down. But this is like where it just pokes its head up and pretends to get out. So if it pops up any higher, but fails to cross, you can still build in and stack on this. All right. So when is news? Is it happening?
There's no news.
There's home sales at 9 in 15 minutes.
All right, in 15 minutes.
It's not red.
Right, but it may give us a ride the wave situation, right? So here you're looking at a bottom of support. So this is what you'd look for when you're looking for a ride the wave. When it comes down and it tests this, and you can see it came down, test it right here, test it right here, test, you know, right there, started right here, probably built up, and then here's the third test. So that's probably something else that we could do, is look for high probability trade setups and back test them. That might be something else that we could do as a challenge. Okay, so because it crossed right here, I'm going to change. I'm just going to get out of these guys right here and look to get into some buys. The reason being is because it could be over. That situation could be over where it is touched the support and now it's going to come up. So in order for it to have a turn up, it's got to cross that, right? And I'm not looking to, in fact, I'm probably just going to reduce my position size because I need to hit that button. I just don't like trading.
That's right. There's an action point. Excuse me.
All right. If it breaks down, it could run again. We'll see. So first test, second test. If it fails, it could. So this is what I'm looking for. Yeah, here you go. Now we're into a ride the wave situation on the break. If this candle body holds, if it break above this point right here, then it's probably going up. All right.
So I got my 10 now.
Hey, did you do it with a take? How did you get it? Oh, because
no take profit. It's running at 10 plus.
Oh, awesome. So challenge accepted, challenge passed. All right, now do it with your eyes closed.
I did it with a hedge.
So also the ride the wave is not over yet. So if you get out just at 10, you still didn't execute ride the wave, right? I mean, if it doesn't give you 10, that's fine. But here's what I do on a ride the wave situation where it's a major break and it's coming back. You could get out here, but I definitely get out when the body crosses 50% of that first candle, right? If it holds, the body holds, most likely you're going to get 100% retracement. So on the first pop of that candle, if it goes below 50%, I will usually get out on a body close, because you could get you will get 100% retracement, and sometimes it even goes back the other way. So true ride the wave situations, when you get it felled at 50 and it gets continuation here, and then it just continues to go. I don't know if it will at this point in time, only because it has dropped quite a bit already, right? And so you could be at the end of, like, it could be oversold, right? So I wouldn't. This is what gets you on Fridays, because personally, if this was normal, I'm just like, I'm not trusting price action a whole lot on Fridays. So normally I'd probably be buying off this for a turn, because I feel like the market is oversold and it's probably going to bounce. But I'd look over here on the 5-minute and see where's the next possible bounce point. And it's right. You do have a bounce point right here. Right here and right here. So if it wants to continue to run down, then I'd measure it. How far is that? If it does want to run down, it's another 6 pips. So here, now that it's not crossed 50%, it's not made another high. It's not made another high, meaning this candle. So the rule for the ride the wave still is in play. We're holding on to any trades that we have until it crosses or closes above this point with a body, and it needs to be like close up here. Like if it just barely closes like a little tiny bit higher, I don't usually take it, but doesn't usually do that. But sometimes it's hard when it just closes like right here. So I usually look for like a good confirmation of a close higher, right?
Would you hold for news?
Depends on how heavy of a position I have. So if I'm worried about news, then I would do this, and I'd come down and I say, if it crosses this with the body 50%, then I could put like a stop loss right here. So if news does come in and shoots that way, I've secured my trades, right? And so that's probably the smarter play, is just kind of measure this and say that's a 3 pip stop loss. So bring this down to 3. Now it's not 3 anymore. Just wait for that to come down there, and put that on. And if it's like a lot of trades, that's what I would do. But if it's one trade, you could have just done it manually. And now it's a secured trade in case news comes in, pops up, and decides to go the other way, which I kind of feel like it will, only because generally, again, not a big news event, but if it was a big news event, the market tries to push it down, then news will try to correct it a little bit or push it in a direction then when news comes in. But I don't think that this news doesn't have any influence. It's not a big news event. It probably could be just a nothing, if it comes in as expected, probably not going to move the needle much. But if it comes in not as expected, it could move. But other than non-farm, Fridays are usually quiet with news events. But the last couple of Fridays, we've had this kind of stuff, which has been very difficult to trade in because I want to buy. Like, I want to put buys on because we're in an overextended market, but I'm not because I don't trust the market. And so I have trust issues right now. And so we have trust issues. I don't trade, just trading light is how to navigate that. Yeah, Nick. So I just view Fridays as a completely different beast. And once you start recognizing, oh, it's Friday trading, it kind of ignores, like right here. You look at this. It should have stopped right there on an action point right here, or at least paused. No, blew past it, right? Here's another action point right here that blew past it. And so you're starting to look at this trend right here. Here's another action point, right? It came up and it stalled, but it didn't create a body. It just kind of, the next candle blew past it, right? And then back again, these action points are getting ignored. And so if these action points are getting ignored, then it's difficult to say, well, the market should do this or should do that, right? And so in doing that, really the only true strategy is the ride the wave strategy in the market that you don't trust. And it's just getting on the right side of that and getting out of that if it once it turns. And so that you can kind of trust. So you got this trend, wouldn't even call it a channel because it's not giving you enough on the up. It's just not giving you enough on the up, maybe right there, but it doesn't give you enough on the up to make any money, right? So in order for this to break and start moving up, it does have to cross this area right here. And if it fails to do so, I would still continue to sell. So on the pop up, I'd sell right there. Again, just trading super, super light and taking profits. So the game here is normally when you're wobbling, let's say if you normally trade at a 0.10, and you get onto and you go for, let's say 3 to 4 pips of take profit. Well, now we're just trading at a 0.05, but we might be going for 8 to 10 pips of profit because we're kind of, letting it ride. So that's the way that I would trade markets like this. And this is what you typically get on Fridays, or we have been, like these huge runs of 30 to 40 marching markets. It's the way I trade summer too. A lot of days are like that in the summertime. So one thing that I do as well is I do look for, so I used to talk about this a lot. It's a belay technique. I used to talk about this a lot in the summertime because it definitely saves your butt. Because in the summertime, as well as Fridays, where you would look for this to bounce, and so you would tend to buy here off of this bounce because that's what the market's been doing. If you look past at your previous market, down, up, down, up, down, up, down, up. Well, at some point, it's going to break out of this range, and you don't want to be on the wrong side of that break. So that's what this is. This is the break or an outside range, right? So with a belay trade, it's the same as riding the wave. The rules are exactly the same as riding the wave. However, the belay trade is if you're buying here because you think it's buying, I will also put a stack of sells on in case it does break. As soon as it breaks, I would get out of all of my buys and I would have this as a safety layer. So the reason why I call it a belay trade is because in rock climbing, you always have somebody at the bottom of the cliff holding a rope in case you slip and fall. They stop your descent really quick by pulling on that rope and it stops. And that person's called a belay. And so that's why I call it a belay technique, because it's there in case it breaks through the bottom, it protects you, and you get a lot of that on this type of market. You also get a lot of that in the summertime. And so back when we get into the summertime, I'll probably be talking about that more often, because you just never know when the bottom's going to fall off or when it just shoots to the top where you think it's a bounce point, but oh no, it's a marching market, right? And so that protects you against a marching market that you get in the summertime, or like we're in right now. I would call this definitely a marching market, where if you bought here, you're not getting out of your buys. So it's just really difficult to get out of a buy if you played with normal price action and bought here. Hopefully that makes sense. Dennis, so the trend is your friend until it betrays you. You don't ever tell the trend secrets. Dear trend, I used to love you. You could do that for sure. You could. So Remy asked, could you put the belay layer below the support using limit orders? You could, but what I found sometimes is that you'll get the peekaboo down and then it'll come back, right? And I don't want to get into those orders at the worst possible point. So where I try to put belay orders on is a pop up before. So it comes down, you get that first test. So after the first test and it pops up, even a candle or whatever, I like to put my sell layer here. The reason being is because it's a lot easier to fix here than, say, it does pop down, get you in, and then goes back the other way. This is hard to fix. So you're closing out for a bigger loss, right? And so that's why I don't do that, but you definitely can. And it might be a good idea. It just depends on how far your layer stack is. So great question though, and a great thought, great comment. So all right, if it breaks here, could be into another ride the wave situation. Just looking at, the pattern of the market, it goes up a little bit, goes up a little bit, and the market is claiming this as look, we price cycled up. Now we got to go back down. I'm like, oh no, you didn't really. Let's say Nick says the trend is a narcissist friend that only cares about himself. Yes, everybody has one, and if you don't, then you're that friend. All right, let's see here. Here's our ride. See, getting that
Question about the ride.
Yeah.
When do you, if you do, when do you add to that ride the wave on pullbacks?
That's a great question. So let's do that. Let's maybe make that a challenge. Let's
So I
add
get
that to our
50,000
challenge.
Dave, leading economic indicators down 0.8 versus down 0.4 estimate.
Okay. So this is probably the news right there. It came down and now it's trying to come back up. So if it crosses this, that's what I was just going to say. Like, if you wanted to build into this position, the safest thing to do is to get a secured layer on. You see how it crossed the 50%? And that was probably the news. Like she just said, the estimate was, off a little bit. And so it came down, but now it's correcting itself. So probably.
And home sales are better than expected.
1.22 million homes for sale at the end of October, down just under 1% both month to month.
So you see that it's really a kind of a nothing burger. It's not going to change the trajectory of this trend or anything like that. But let's do that. That's a good challenge though, that Pete says, when do you add to a ride the wave situation? So I don't see it just yet, but we could get back into, once this market decides to turn and go higher, we could be into another ride the wave situation. And what I'd look for that is right here, right? But I'd also start building in if it crosses that. If it fails to cross this and body comes in and trades lower, I might jump back into some sells for another test of that low. So let's draw out when to do that. Okay, so on a ride the wave, let's say the market comes down here and this is where you get in on a pop-up, you get in and you're starting to ride this wave, right? And then the candles come down, pops up, makes a little bit of a consolidation here and then continues to go down. Well, I would secure my first layer stack right here. So I would put my stop losses right here for any trades that you have on right here. And then the next little bit of a green candle, I would get back in with another layer stack here. Particularly if it fails. So if it fails to go 50% or gives me that body close on a reversal signal. So if I get a reversal confirmation, I'm not doing it. Or if it goes past 50% of this candle, I'm not doing it. But I'm looking for something like, let's say, something like this candle right here, where it pops down and you get this green little pop up on the wick. So you got to be quick. I would build into another layer right here pretty quick. And then secure this layer. If I was into some trades here or even here and I'm riding the wave, or right here probably would be the better place. I would come down and I would secure this with my stop loss, like probably right on top of this, somewhere close to here. So this is where my stop loss would be. This is where I'd build into another layer and I'd write all that down and I'd probably get out of everything here, right there, or I mean, right here when the body crosses over. Or you could see probably continue to hold this. Here's the other thing. Normal ride the wave situation calls for, as soon as this crosses and gives you a confirmation of a higher, you get out. However, you can also clearly see, so this could be the only exception to that rule. You can clearly see that it's struggling to make a higher high. And so you could say, I'm going to ride this until we get a higher high, right? So you could say that the channel is kind of like your support, as this is your support and your resistance right here. And so if it fails to cross this line, you could still hold in to a ride the wave situation. And that's the only exception that I would say to getting a reversal signal. Is a lot of times in a marching market that you're in right now, it tends to not reverse that way until it breaks this support line. And so you can use this as your support line, right? But more often than not, when you're in a ride the wave situation, it's not going this way, or it's not going like this. It's usually going down pretty quick. And so if it goes down pretty quick, it tends to go back up just as quick. And so that's why normal rules dictate that you get out when you see that first confirmation, because it's the trajectory or how fast it's moving in one direction. In a marching market, the rules are a little bit different, right? So the rules are slightly different in a marching market. And so just identifying that, like, there's not just one wave that's out there, right? And so I would say, if it just shoots down, straight down, that's like you're surfing here, right? If it's doing this, you're surfing the wave right here. If it's doing this, where it's just marching right here, this is kind of like, you're playing in the wave pool, right? And with your floaty. So you're riding the wave, but it's like woo, 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 instead of like a catch that curl and then come back, right? And I don't know surfing terminology. I live in Utah. Maybe ride the wave isn't so, ride the slope. There you go. Call it ride. Let's surf the snow. All right. So the challenge now has changed. If you've completed that first challenge, which you should have, that first challenge of make 10 pips on a ride the wave, the challenge has changed because the structure of the wave has changed. So look for opportunities to build in to a later stack, right? And so we'll see how far this goes at any point. Like I know that if Sean was trading this, I know for a fact he would be counter trend at trading. He hates the trend. He thinks that the trend is his bully, not a friend. He always fights against it. But he's not trading today because it's a Friday, right? And so it's hard to, but if this is a normal day, I'm buying. Like that's what you should be doing. But you need to understand what makes Fridays different than any other day. Anybody have any thought to that? Why is Friday? Why do you hear a lot of people say, well, I don't trade Fridays?
Less people are
You only have
trading.
one session.
So what was that? I heard Cliff, but what was that?
I said,
Pete.
oh,
He
That's all
said
right.
volume.
So the reason why you don't trade Fridays is because you hear a lot of people say, I don't trade Fridays. And so there is exactly. So there's not a lot of stability in the market. You tend to only get retail traders. You don't get a lot of other big institution money coming in on which stabilizes the market. And so you could get a hedge fund that comes in and says, I want it down, and like a ton of money could drive the market. And I'm not saying that that's what's happening, but on Fridays, if they're going to do it, that's the day they're going to do it, right? Because there's not a lot of traders, like your volume is down, right? And so that helps to ignore price structure when you don't have opposing forces, fighting back and forth. You don't have a lot. So if you have more bulls on one side or you have more bears on one side, that can drive the market. All right. So if you wanted to continue to ride the wave, the structure right this second looks like this. If it's breaking out and holds above that, that's when you should get out of all your trades, because we could be looking for another ride higher. So now if we want to get into a ride the wave situation where we're going to go higher, it has to close above this. I'd look for it to close above this, but more double confirmation would be closing above that, right? But if it closes above this, comes up to here, pulls back, fails to break this area, this is a good entry point. Really good entry point for some buys. And so this is what I'd be looking for buys, right? Is at any point, right? So if it fails right here, what's going to happen? What's most likely to happen if this
Test the bottom.
Yeah, it's going to go and continue and at least test here. However, it failed to cross, but it also failed to go down. So basically what it said here is like, I'm not going to do it. I'm going to let you this next candle decide. And so that test is not done yet. Does that make sense? This candle decided that it was going to wimp out and say, no, I'm not going to make the decision. I'll let you make the decision. And so now all the information for what the direction is, are we stopping this market right now? Are we stopping this marching market? This all rests upon what this little candle wants to do, right? If it wants to be a brave little candle and go out on its own, and go into the forest all by itself, and does it have enough courage to continue to break this area? And I'd say this is a good solid confirmation. So I would look for it to kind of pull back a little bit, even on this candle. So in the next 44 seconds, I would look for a little bit of a pullback. If that candle goes blue, I'd start building into a layer, particularly if you have at least 2 or 3 pips away from the top, because you're like, okay, that could be an action point, but still, it's still on your mind. You know what? It's still here. So it really does have to break this in order for you to get into a ride the wave. So any trades that I'm doing right now, I like the fact that it broke here, but I'm getting still would be early, because it could stay, we made it and we're going to go back down, right? And so I'd be getting into a layer, but not like a double layer of a huge confirmation that we're going the other way.
Oh,
So
you can see it against the W.
I should write a children's book. The brave little candle. I think I can. I think I can. One day, a little wick woke up and said, I want to be a candle. That's like, if my dad's still here, he used to call me, oh man, what was it? I'm gonna slaughter what he used to say. It was like, you help me, Dad, if you're still here. You think you're a candle, but you're only half bright or something like that. I don't know. Maybe you guys have heard it. It's an old saying. He's not here. He'd know exactly what it was. He was basically calling me like a half a wick or something. I don't know. Boy, the stories he could tell you, but he's sworn to silence. But didn't we all do some dumb stuff in our youth? That's for sure. And
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 continue.
we were, if you're over the age of probably 40, you probably spent most of your childhood outside, right?
Yes, yes.
And so you only had stupid stuff to do. we weren't glued to our keyboards where your parents knew exactly where you were 24/7, right? Unsupervised, exactly. My
Black and white TV.
The only rule that my parents had is when the street light was on, you were home, right? Because that's it. They didn't have phones. They couldn't call you. They had no idea where you were. They're like, that was the rule. If the street light is on, you better be home, right?
Came home for bologna sandwiches and Kool-Aid.
That's right. Yeah, but they had no idea where you were. You know,
Oh,
they had no idea where you were. You know,
I don't know.
they say I'm at a
Black
friend's
and white
house.
TV.
Yes, yeah, and you had to get up to change the channel. How archaic is that?
Yes, that's it.
Hmm.
And the
Or
6
if you had one of those TVs on Saturday morning cartoons, we'd always take turns, and somehow my little sister always had more turns than everybody else to get up and hold the antenna. You guys remember that? Oh, yeah, perfect. Okay, hold it just right there. Yeah, you only got 2 channels, but only one of them could come in. And I'm like, oh, I'm sorry, sister. Yeah, I'm sorry, but My Little Pony is not coming in. But you know, we get a good He-Man. All right, so here we go. We got a little bit of a confirmation here. So now, if it does turn into a ride the wave situation, the challenge will be to secure this layer, stack, get into another layer, and stack on it. Right. So again, just like this marching market, it could turn into another marching market back the other way, but I'm still looking at kind of this action point here. If it's going to do that, you'll start to see like a little bit of a channel is going like that. If it's going to keep the same kind of formation as the other one, or it could just decide, you know what, you've gone down as far as you're going to go. We're going to smack you back up, and it could truly turn into an aggressive move higher. So those 2 different scenarios, you trade those 2 different ways. So just like I was talking about here, you clearly have an established visible support and resistance line. Here, you don't have that yet. And so you would still treat this as the moment that you get confirmation that it's going to go down, you would still get out, right? Because it is the trajectory of this is in that direction, right? So at least that's the way I would do it. Josh, to know those fire department hoses hurt when they hit you with it. Now, was that you and your friends, or is that punishment from your pops. Because there's a difference. There's a difference from a friend saying, hey, tell me if this hurts, to to your dad being a firefighter. You're never going to do that again, are you, boy? Oh, I wish my dad was here. Oh, that you were 8 years old, so it was a punishment, not a stupid thing, right? Oh man, it's just like I as guys growing up, the common theme was friends was, tell me if this hurts, right? It's almost like one of those dumb things that you still get today, like when people are like, whoo, that really smells bad, smell it, like, and then you do. Why do you do that? Why do we do that? This is the worst thing I've ever smelled in my life. Smell it. Okay. As people, I don't know why we do it, but we do. Like, okay, I'll smell it. They spray. Ooh, 150 feet. That's crazy. That is crazy. Oh, I'm going to tell a story since my dad's not here to protect himself. So as kids, we kind of grew up in the child abuse stage. I don't know if you guys grew up in that, I'm sure you did, where it was okay to smack kids around. And I'm not saying my dad, oh, look, he's here now. I'm not saying he did that. But obviously that was like the way you raised kids back then. So what he did as a fear factor was he named his belt Ka when Jungle Book came out. So if you guys remember what Jungle Book was, Ka was the snake. And so we were always afraid of the snake and Ka. He's like, do you want me to go get Ka? That was the name of his belt. And that was his intimidation for us to knock it off. Like he named his belt Ka. So I still can't watch Jungle Book. Thanks, Dad. All right. So now if it does cross this, I'm going to secure this layer. Again, just trading super light because it's not about making money or becoming profitable today. It's about kind of seeing what the market is doing and seeing if we can't teach a principle today and get better at it. All right. And so here, you know what? Let's see. We're at 7 pips on the table. So I'll probably secure this trade. But again, I could see it bouncing here. So there's 2 ways to play it. But for the sake of this challenge that I want to do right here is we're going to hold on to these, see if it does, in fact, climb a little higher, because this is the place where I would stack another layer on. So I would secure these trades right below here. So to do that in this, you can either use the magneto tool in Alveo, or you're going to need to come over here with Protégé, and we're going to say, okay, we're going to go 3 again. So you just got to measure where the current price is, measure down how far you want to go. So it's 3 pips, and we'll set our longs. And I'm like, okay, good thing I'm in the right. I think it was Megan that had that question, to buy high and sell low. I'm going to make sure that I am actually in buys and not sells. Like, okay, if I'm profitable, then that's good. I'm just going to drag these down a little bit because this is really an action point right here. And I want to make sure that it crosses with the body before it does that. Okay, so now I got this layer on 3 trades, and just because I'm light, I'm 0.05. And I'm going to say that for the purpose of this exercise, a layer is 3 trades. Okay, so if it crosses here with the body, you do have this kind of action point right here. So I would imagine that we get that body cross. If it bumps up to this, comes back down, you got 20 seconds left. This is where I kind of build into another one. Now I'm not going to fade that candle, even though I wanted to, but I'm going to wait for that candle to come back, build another layer on, and then just basically didn't want to put it there. I was clicking it down here. But the candle shot up and put me there. So if it does that, you could pull that off, especially if you just, this not a good place. This is not a good place for this. It's not a bad place, but better placement would have been below this or at 50%. So again, is that candle going to go down below 50%? If not, there's a good chance that it could break higher. But I could peel this trade off if it comes up and stalls, and then as it comes back down, I could put it right back on just for a better placement. So just kind of replacing the trade, right? And I look for another opportunity to buy into that. Oh boy, I gotta not use that. Didn't want to put those. I wanted to stay light, so I probably will just peel those off, just because the theme today is not to trade, and it's to trade light. So if it pokes its head down here early in the candle, I'm still not treating that as a reversal and still buy in off that right there. Especially if it pops down, I'm buying into that. And the key is, again, staying light, because of these types of moves. Got me out of that layer stack. But I'm still now you have to wonder if it's going to do over here, which is create a channel, right? So if it crosses this, then this run up is done and you need to get out of your buys for a possible test and a run lower. But if it fails to cross this area, it could do the channel thing where it's gone up and now it's going to continue to go up that way. So again, this goes back to plan A and plan B. So plan A, I'm obviously set up for a channel run. Plan B is it crosses this right here. Just get out of these trades and start working into some sells for the test down, right? Oh, you guys, I love your comments. Let's see. Josh says, I had a cow fenced hardwired to a 220, and every time their water ran across it, they got a cow fence. Okay. I read that wrong. I thought you had a cow and you fenced it and you hardwired the cow. You had a cow fence. Totally different. I'm like, what are you doing? Hey, pure water. Pure water. Nick says he's hoping for a channel. So Nick, I think that you're trading this in a live account, or just curious. So it gives us a okay. So do you need help? You want to flip over your screen, see what we can do in like 30 minutes? Do you want to show your trades or no? All right, let's do that. Let's jump into there. So for this, just because like I said, I'm not really trading this. So I'm going to just, if I'm out here. So this is what I would do if I had to walk away. Let's say you have to walk away. You got a phone call. You got to take it. You can't watch your trades anymore. You're in a situation where you need to walk away. This is what I would do. I would probably set my stop losses right under here. So I'd probably put them like 8 pips away, which is why I love Magneto, because you can be precise. You know, on here, you have to do solid pips. I can't do like 7.2 or whatever, right? And then I'd probably set my take profits to the top of that. So my take profits right under it, probably 9 and 7. So I'm going to set my profit at 9 and my stop losses at 8. Right there, somewhere in there. And that's good. So that basically says that if it does in fact cross this, it's probably going to run down, and I don't want to be on the wrong side of that for another 12 pips. And it says that if it pops up I can get out. Now, if you want to look to break even, you could also set it there too. It just depends on how heavy you are. But we'll see where that goes, how that goes. And then I'm going to stop sharing. And hey guys, what an awesome opportunity we had to learn a technique that I call ride the wave. It's one of my go-to techniques in a market like this, where it's just a marching market, slow moving channels, just gradually going in one direction. You just stack on a few layers, secure those layers, and then ride the wave until it ends, right? Now, we do have a unique opportunity to help Nick out, one of our traders, fix some of his trades. So if you'd like to see that video, we're gonna go ahead and throw that up right here. So again, as always, like, subscribe, comment. I do read the comments and I will get back to you. So thank you guys again for all your love and support, and we'll see you guys tomorrow.